Welcome back to Switzer. The cliche says it all for centuries, that diamonds are a girl's best friend, but can they be an investor's good investment? And if so, what kinds of diamonds have a better return history? Gary Holloway is from Melbourne's Holloway Diamonds, and he is an expert. Gary, tell me, what kinds of people are you seeing investing in diamonds?
People through or associated with their super fund. Yep, definitely. Tricky if, from the point of view of they can't have them and wear them, they have to be kept in a third-party safe. Yep. That's easy to manage. Have some diamonds in Hong Kong so there wasn't even any GST on them, and we'll probably sell them overseas. If we sell them in Australia, the GST is not an issue. Also, accountancy-related people who are dealing with Chinese.
So the Chinese like to have gold, I presume, and diamond as assets to invest in?
You know, the problem with gold is if you're investing in something that you want to have as a liquid asset that you can take with you if you need to leave somewhere quickly, diamonds are great. Can't see them in an X-ray machine. Try and take a briefcase full of gold that costs as much as a pink diamond. It's pretty heavy. Yeah.
Okay. Of course, people don't understand what kinds of diamonds are really for investment. So if you had to summarise the kinds of diamonds that, because not all diamonds appreciate in the same way, tell us the kinds of diamonds that are good for investors.
Okay, there's an independent organisation that is audited, the Fancy Coloured Diamond Research Association. Organisation, something like that. It's on one of the name's on one of the slides that's coming up. 5% increase for fancy yellow diamonds, small increase for colourless diamonds. This is in US dollars. Of course, the Australian dollar actually has a bigger impact on those stones. 10% for blue diamonds, and around 17–18% for pink diamonds.
Now, I know we've got a chart. We'll have a look at the chart now and talk us through. There's 3 lines on the chart, so talk us through what our viewers are watching. The
Dow Jones was a nice safe bet. The gold price, of course, went up after the big shock of the 2008, but it's fallen back since then. And clearly the pink diamonds, they're just way off the chart.
Okay, so that's the thick pink line on the chart.
Yep. So, and if you go to that next slide now, you'll see that I've popped in a steep arrow where you can see in that last year the pink diamond price hasn't appreciated, but that's because of the strength of the US dollar, the quantitative easing.
And I presume some of the rise in the pink diamond that period would have been when the greenback fell during the GFC as well.
Yeah, like fine art, they were one of the things that people realised investment world was topsy-turvy, and so we saw Monets and things like that going up in value and record auction prices. So the pink diamonds never actually fell during that period.
Tell us, define a pink diamond.
There's 2 main categories of pink diamond. Pink diamonds from the Argyle mine and pink diamonds from the rest of the world. The pink diamonds from the Argyle mine attract, depending on who you believe, between 15 and 30% premium. And the Argyle mine is probably going to close about 21 or thereabouts, so another 6 years or so.
So there's a limited supply.
20, but the output's very low at the moment. They've had a lot of problems, so I'm thinking 21. The output isn't huge anymore. It's nowhere near as big as it was back in the heyday 25 years ago when they were producing 40 million carats of diamonds a year. But even back then, they were only producing a teaspoonful of the diamonds that we're talking about, that are the $50,000 plus diamonds.
Is there a certain size? Because when you showed us that chart, I think you told me that there was like a 17% per annum return over a 10-year period. Was that for all pink diamonds, or do they have to be of a particular size and grade? Excuse my lack of knowledge, but I'm sure you know.
The grading scale is fairly complex, but what we'd be looking at is the top three. There are about 7 grades: fancy pink, fancy intense pink, and vivid pink. The fancy intenses have slightly outperformed.
Very girly names. Not there's anything wrong with
them. Yeah.
Go on.
And they're very attractive to girls as well. Now, red diamonds are even more expensive, but I don't advise people invest in red diamonds. It's too fickle a market. If the investors decide they don't want them, they're mostly pretty ugly. And the girls don't want them, so that reduces.
So there is a constant demand for pink diamond.
Yeah.
Okay. So once again, the size, is there the size of the diamond, is that critical to the investment return?
I don't like to play around below half a carat. I think below a half a carat you're being silly. So mostly in the range of a half a carat to 1.5 carat.
Okay, I'm sure some of my viewers want me to ask you this question.
How much?
That's right. How much do you outlay for a half a carat pink diamond?
A half a carat fancy intense starts at about $50,000, and that wouldn't be a special one. The colour ranges are quite broad, so I would say $100,000 plus gets you in the game.
Now, I always say when people ask me, always be wary if you don't understand the nature of the investment product. How do people actually become knowledgeable enough to feel comfortable about investing in diamonds? Clearly this interview is going to help them, but they want to know more if they're interested.
Well, I've got a 20-page PDF and a whole series of videos. If anybody wants to contact me, I'll send them the PDF on a dongle.
Yeah.
The website, hollowaypinkdiamonds.com.au. There's a lot of stones there. There's no prices. I'm doing this on a commission basis. So if anybody wants to buy a stone, they will see the actual cost price and be involved in the haggling. The haggling in the past has been, I've been able to get prices down to lower than my commission, so hopefully I'm adding some value there.
Okay, tell us about the storage, because that's another important issue. People clearly would love to have them at home, just like they would artwork, but what is the tax office ruling in relation to storage?
I think I should be asking you that. You're the expert.
Yeah, but I'm sure you have clients who have done it.
You need to keep them in a third party. If you're doing it through an self-managed super fund, they need to be kept in a third party safe so that you don't actually have access to them. Now, as I said, if you want to do that offshore, then we can arrange something Hong Kong or New York. I also have an associate in New York who will actually set stones and help to sell them. So then they're definitely in a third party. He'll put them to Sotheby's and Christie's auctions, which makes it possible for people to actually have the stone out there working, and clearly at an arm's length. So there's no hanky-panky, and the tax office will be fine and happy. Yeah,
we're not looking at hanky-panky, Gary. Now tell us, you've been in the business for a long time.
39 years.
What do you say, well, what's your view on the economy? You're a consumer discretionary spend, and I know you have the high-end type customers who probably spend no matter what, but you also have access to middle to upper middle class buyers who buy when they're feeling confident. Are you seeing any positive signs?
The positive sign is almost exclusively coming from the property development people.
People in the housing sector.
In the housing, but especially the high-rise, the architects, the people who are involved. In Melbourne, I mean, there's a lot of Chinese apartments being built. So a lot of the developers that are involved in that. I've seen throughout the 38 years that I've run the business, I've seen waves of industries doing well. Many years ago it was the small manufacturers. Most of my customers are self-employed, or they're CEOs or upper management.
Now, I guess the next question is, what are the critical factors that turnaround sentiment for a business like yours? What would you like to see?
Oh, definitely consumer confidence. It's pretty clear and apparent to everybody that consumer confidence is at a very, very sad low. So it would be a mixture of politicians, employment, business investment, capex investment, all of those things, which just aren't happening at the moment.
That's the show from Melbourne. On Monday, we have John Trowbridge, the guy who's going to put the cat amongst the pigeons for the insurance industry. That'll be a very interesting interview. I'll see you then.